Yeah, welcome back to DXB today. A little bit of a tech special for you this evening. Why? Well, it's tech all year round, but none more so at this time of year. STEP's just around the corner, the conference that has attracted so much interest globally. And if we see more and more people not just attend, but also show at the conference. To that end, let's hear now from one of the standout companies at STEP 2026. Zest Equity is going to be there, and joining us now in the studio is the co-founder, Rawan Baddour. Rawan, thank you so much indeed for being with us.
Thank you for having me. Very excited to be here.
A lot of people out there, it's late in the evening, they're going to be sat back and we're going to talk fintech to them, we're going to talk equity, etc. But then you're at STEP as well, and what STEP does is it breaks down not just borders, but also barriers when it comes to conversations about things like this. So let's go with the old Zest elevator pitch, if we can. What's Zest Equity, and what do you do differently?
Okay, so Zest is a, let's say, financial infrastructure platform, and what it does is it digitizes the workflows and execution processes that are required for kind of the execution of any investment into a private company or a private asset. So you can think of us as kind of the rails or the pipes that are sitting kind of in the background. You come to us as a client and you tell us, okay, these are the parties involved in this investment or transaction. These are the tools I need. And so you come onto the platform, you can pick and choose what you need, press play, and then we automate kind of that workflow that you need to get the investment done.
I love how she just said, press play. It makes it sound so easy, but I'm imagining back in the day, it would have been like tons of paperwork, right? So take us through the process. How easy is it to do it now digitally through something like Zest?
Listen, it's interesting because when you think about it, a transaction execution process, so you have the initial phase of a transaction where whoever you are as a deal maker or somebody arranging this deal, you have to negotiate the terms, you have to agree with your investors, so there's all the pre-prep work, and that still has to happen. But then nobody really thinks about, okay, now I have everything ready, but how can I actually get this done? And what we used to see previously is all these different channels, from contracts being sent over WhatsApp, to a million email chains, each with a different party or stakeholder, to somebody who's already very busy running a transaction, kind of trying to put everything together into whatever folder system that they use, and things getting lost in between. And it's not just about kind of the operational complexity, but even for the investors, it becomes extremely frustrating. Wait, where did you send me this document? You asked me for a passport, right? Okay, it just becomes extremely, let's say, a lot more complex than what it should be from an experience perspective. And so what we're doing is, okay, let's kind of strip out all that complexity, and from a user or client perspective, it can actually look very simple, because just give us all that information, and then your investors will just come in, digital, like their whole experience in terms of like onboarding, AML, doing all of the fun stuff becomes actually extremely easy and not intrusive. And then they can go throughout the journey kind of in a single place, whether it's signing documents, accessing certain things that you want them to see in the data room, the funding flows and actually funding that investment, all the way up to kind of the closing process itself, and visibility and transparency on where the transaction actually is within that process.
Rawan, given the nature of your product, you have like special access to a lot of things that are happening within the region in terms of funding and so on. So one question is split into two. First, are you seeing specific kind of like outlook in terms of growth for the region, especially in the later rounds? And two, what are some of the mistakes or things that should be fixed within deal structuring and other things that take place within the fundraising that happens within the region?
Okay, so let's start with, listen, in terms of growth, I think nobody can deny the growth that the region generally has witnessed. It used to be kind of a place where you would see capital move from time to time, but it's become a hub for capital. Like it imports and exports capital both, right? So you have a lot of interest in the region from foreign investors, and you have a lot of companies also choosing the UAE to come set up and actually build for the world. So that changes the dynamic, I think, from an investment perspective. The market looks very different than when STEP started. You mentioned 14 years ago today. It looks very different because you have talent from all over the world coming in, and the expectations also have shifted from an investor perspective. So you go out to fundraise today, the questions are not just about your business model, but the governance layer, the foundations that you have built kind of over time within your company start to matter. So who are your investors? Do you know who they are? Have you run kind of the right due diligence processes in between? Do you understand kind of your company and how it's built, and is it sustainable for the long term? So we see a lot of investors asking a lot more questions. Due diligence has become a lot tougher. And as a founder, you have so much to deal with kind of on a day-to-day basis. So you need to set yourself up in the right way to make sure these foundations, whenever you're asked for a data room, you have everything there and you're not scrambling to figure out where you left the different contracts, kind of the different requirements. So I think, yes, it's grown a lot. Growth has brought in a different set of expectations and a different set of things you need to really start to think about as a company building a large business. And I think together that's allowing for a much more sustainable, let's say, growth and trajectory, I think, in businesses and how they're being built out of the region.
It's interesting because I'm actually going to turn it back on to you and Zest itself, because I understand, what was the figure, $3.8 million that you raised in funding at the beginning. And I'm interested to know then, perhaps, because in case anyone's watching, what do you think your investors saw in Zest that enabled them to give you all the cash?
Yeah, so we've actually, to date, we've raised just under $10 million.
Wow.
Yeah, I mean, thankfully, we've had great institutional investors kind of believe in the mission. And I think our first 2 fundraising rounds were very different than kind of our last one. The beginning, it was about, okay, do I relate with the problem that you're trying to solve?
Right.
Do I believe in you as founders in terms of your integrity, your conviction? Do I trust that you'll actually sit there, spend the time and actually build and adapt to the market and do what you intend to achieve? So the beginning is a lot about, okay, who's behind the business? That relatability, do I understand your problem and how does the market size look like? But then as we kind of graduated from there and we went on to our last round, which was actually anchored by Process Ventures, who are a large global, let's say, VC fund, as well as Morgan Stanley, through their Ventures Lab, who participated. The dynamic was completely different. It was one, I need to see the traction now. It's not about theoretical, here's a beautiful deck. They needed to see the traction. They needed to see the governance underpinning what we've been building. So the due diligence process looked completely different. And then obviously the market size. Are you just building for Dubai? Are you building for the UAE? Is it a regional play, or are you actually building for a more global type positioning? And those questions started to matter a lot. So I think from our perspective, it was alignment with our investors on where we are, where we want to go, and proving that the underlying foundation is there for them to come and say, you know what, I trust that this can go somewhere.
We're almost out of time, unfortunately, but we're going to ask you to stick around for the spotlight in a minute. Just very quickly, Step's just around the corner. And look, as we mentioned a little bit earlier on, Step do things a little bit differently. Looking forward to taking part of Step this year. Is it something that you guys look forward to?
Listen, we love Step because we go to so many events during the year, but Step still feels like you're in a community, grassroots type, energetic place. It kind of takes me back to why we wanted to start building a business and back into, because today we deal with it's like legal, transactional. We deal with a lot of, let's say, our day-to-day looks very different. So going back to something like Step, honestly, it re-energizes. I love meeting up with the community. It brings a lot of people together. It's the one event that brings a lot of people together. You see the OGs of the VC ecosystem.
That's what we call
exactly.
It's a big reunion.
We're going to have Step alumni.
That's a good idea.
And everyone gets sneaker energy. There's some really good sneakers.
Oh yeah, there's sneakers.
Especially when you turn up like me, you know, with sweat. Everyone's like, what's wrong with him, you know?
We'll get you some.
It's fun, and you guys have been able to attract a lot more, let's say, of a global audience today, especially on the investor side. So the conversations you hear are interesting. The diversity in the panels, personally, we love it. We've been participating every year, either just as attendees or on panels, sponsoring now.
Yeah, thanks for being part of it. That's
we
a
really
great
love
example of a startup that started very small, and now Zest is one of our sponsors, and we've grown together.
Amazing. And now it is time for the roundup. Katie's got this one. What do you have, Katie?
Thank you, Louis. Yep, so Dubai is ranked as the world's fastest growing VC ecosystem. Now that's ahead of cities from the US, Europe and China. Dubai is home to more than 380 venture capital funds and 325 wealth management firms. And it has direct access to $8 trillion in private wealth. Now, it has a stated goal of scaling 30 unicorns, now their companies worth more than $1 billion by the year 2033. Notable incubator hubs include In5, Astro Labs and Flat 6 Labs. And the top startups to watch in 2026 are Alan, a corporate spend management platform, Queso, a B2B platform connecting restaurants with food suppliers using AI, and Bezat, an HR and insurance technology leader, to name but a few. I mean, Dubai clearly is the place to be, right?
It is, yeah. It's the hub for the global south.
We're in the wrong business, Katie, Tom. Why are we not starting a business just yet? But of all the businesses that they've mentioned, which ones have really rung true to what it is that, you know, startup has been talking about and pushing in your events?
You have the obvious ones, of course, that, you know, have become unicorns, you know, over the past. Like if you look at Property Finder, for example, one of the very, you know, classical success stories in Dubai. They're acquiring startups now. They acquired a company called Stake, I believe, and they just raised a big growth round. We had the founder Michael speak at Step last year.
Nice.
So that's one of, you know, a great success stories. But one of the companies, for example, that is showcased at Step very early on is Trucker. And Trucker went on to become, raised, I think, 350 million. They started just the founders, and initially, you know, when they first started their showcase, that Step, but now they've become pretty big.
Can I play bad cop for a minute? I know what I shouldn't do, because we're here to celebrate all things success, and we've seen great success. The reason I asked that, and just Katie got me thinking there with the numbers, and we get these numbers reiterated to us time and time again. We hear the success stories, etc. If not just Dubai, but the region is becoming synonymous with equity, liquidity, capital, a lot of people will look to Dubai and go, oh, they look to the UAE and say, look, if I move my idea there, I'm going to be made up already. Do we have to have a bit of a sort of wake-up call about liquidity and almost like an education process to founders and startups?
Isn't that 100%? I think two things. First of all, by the virtue of having an idea and moving out here does not mean success, right?
Thanks, yeah.
It is giving you the right, let's say, foundations and the right ingredients to succeed. If one, you actually work hard at your idea, if your execution is like really on point, because you also have a lot of competition now. So you might have been a single company or maybe have one competitor in a space. Today you could have 15, 20, maybe 50 players really fighting kind of for the same market share in a very specific kind of industry here.
Rawan, you are just filled with so much ideas and of course so much knowledge on this topic. We wish we could have you a lot longer, but thank you so much for joining us and educating the likes of Katie and myself.
It's quite genuine, like I'm listening and I'm like actually learning stuff. So
we're picking up all these keywords.